The Financial Survival Network, helping you to survive and thrive in the new economy. To find out where to buy gold and silver reliably at great prices, go get your free Financial Survival Toolkit at financialsurvivalnetwork.com. You'll also get our complimentary newsletter. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network. People are concerned about their gold. They're afraid of confiscation. They don't know what's going to happen, and they're trying to offshore gold and find other places that might be safer, which is why I've got Bron Suchecki from the Perth Mint. He's manager, analysis, and strategy. He's going to talk to us about Perth Mint and their overseas programs, which have wide participation by Americans and other non-Australians. Hey, Bron, welcome to the Financial Survival Network.
Thanks, Kerry.
It's great to have you on. Perth Mint. Every serious precious metals investor is familiar with the Perth Mint. Could you just tell us a bit about the mint and its history?
Sure. The Perth Mint originally started out as a branch of the Royal Mint out of Britain, and that was established because of the gold finds in Kalgoorlie and the amount of gold that was being produced here, and it made more sense to turn the gold into sovereigns, because those were the days when gold was literally money, and instead of shipping raw gold over to the UK to have it minted sovereigns there. So we started out in 1899 as a branch of the Royal Mint, making sovereigns, and been doing that continuously since that time. And in about 1970, the UK government handed over the mint to the West Australian government, and it's been fully owned by the West Australian government since then. And so we continue to do what we did 100 plus years ago, which is refine gold, turn it into coins for investors.
Right, and so it's a government-owned entity, and you sell actual physical metals as well as you've got funds and pools and that type of thing, right?
Yeah, we do. I mean, our business is really three sort of key parts of the business. The first one is actually our refining operation. We refine around 300 tonnes of gold a year, which is, say, about 5 or 6 tonnes a week. So, say, $300 million a week of gold's just flowing in. And our objective is to refine that and then try and value add to that. So we try and turn it into kilo bars that go into the Asian and Indian markets. We obviously mint it then into coins and distribute that internationally. And everyone knows our kangaroo coins and the silver ones as well. And then we also, the other major part of the business that we started in the 90s was to actually offer a storage service for people who wanted to buy our coins and bars but didn't want to have the hassle of taking delivery and storing it themselves. So there's those three sort of key businesses: refining, minting, and the storage that we're doing these days.
And I think the storage probably is the most watched aspect in the States here. How does the storage program work?
Well, the storage program, I mean, we always, from the 1980s, we were actually domestically offering the ability for people to store metal here, but it was only in the 1990s, mid-1990s, that we started to open that up to international investors. And indeed, our first effort was really to branch it out, was working with Asset Strategies International to create what now known as the Perth Mint Certificate Program. And so we worked with them, and they had seen the success of the Macata delivery orders and came to us and said, look, we think there's a way to improve that and build upon your existing sort of depository business. So that was the genesis of sort of trying to internationalise what we were doing in storage, and it's been very successful, and we have a number of dealers now around the world, and and they've been very good in promoting and raising the profile, and also making it easy for international investors to get some geographical diversification into a safe jurisdiction.
It's always probably a good thing. You have a lot of top-notch metals investors who recommend that you should internationalize part of your holdings in metals, and you've got allocated, pool allocated, and unallocated certificates, I guess, and how does that work?
Yes, well, on a Perth Mint certificate, you can choose which way you want to store metal, and we always offer a range. So traditional is allocated, which is actually, a bar with your name on it put aside into the vault in the corner saying that bar belongs to Kerry. Don't touch. Mm-hmm. We also recently did for silver a pooled version, which is sort of similar to I suppose, what gold money would do, or a bullion vault, is that there's a pile of 400-ounce bars which the clients own in aggregate, and there's a bar list published for that. And then the other thing that we do for gold particularly is what we call unallocated, and it's an unfortunate choice of name because when we started this program in the mid-90s, unallocated didn't have the negative connotations that it did these days. But our unallocated is probably a little bit different, significantly different to what you would traditionally call unallocated, because a normal unallocated by a bullion bank is offered by a bullion bank or a bank, and a bank's business is lending stuff out, and they don't just put banknotes in the corner of a vault and leave banknotes there. So when you give them a gold deposit, they're going to try and work that deposit, lend it out, make a use of it. In our case, the unallocated, we're not a bank, we're a mint. So what we're doing with unallocated is really using it in our business to help fund our business. So the genesis of it was what we observed in the early 90s was that we had clients on one hand who were going to banks or bullion banks, and even with allocated, they were paying a bank money to store gold. On the other side, there was ourselves who were going to the same bullion banks saying, look, we've got all this metal in our factory, we need to lease gold to fund that inventory that's in our factory. And so we were paying money to the bullion banks to effectively borrow gold from them to fund our operations. So we said, wait a minute, why can't we just cut out the middleman here and just go straight to the investors and say, look, how about you buy gold, store it with us, but just give us the right to use it in the business so that we don't have to set it aside as a specific bar in the vault and we can't touch it, but just let us transform it and use it within the business, because we've always got metal in the factory. It might be in different forms. It might be in a sort of a sheet form or semi-made coins and finished coins. There's always a pile of gold that's sitting in that factory, and so effectively your deposit is being used in that factory. And what that will do is give you as an investor a safety or assurance that your deposit is backed by physical that's in the mint. And in exchange for that, we won't charge you a storage fee, because the cost of insuring and storing and managing the metal that's in the business is already part of our business cost. There's no incremental cost to it. So we said to the investors, look, give us a deposit, let us use it in the business, and we won't charge you a storage fee. And on our side, we therefore save in not having to borrow gold from a bullion bank. So it's a win-win situation where the investor gets, as very close to allocated, but it's not allocated because it's not specifically set aside, but that there's physical behind it. And we get to utilise the metal and not have to pay a cost for it. So we thought it was a great way of sort of cutting out the bullion banks from either side and just getting the investors and the mints to deal direct with each other.
It makes a lot of sense because effectively it's in your inventory anyway, so it's a question of how it's financed pretty much.
Yes, if you think about it, I mean, the mint's inventory, whether it's owned by a bullion bank via us leasing metal from them, because when we lease metal from a bullion bank and then use it in the factory, effectively the bullion bank has a claim to that metal. That's the metal backing their loan. Or whether it's owned by our customers, makes sort of no difference. Someone owns the metal in our business. And so we just thought, why let the bullion banks have it? Why not just go straight to the customers?
Sure.
I'm not sure anyone would cry over the fact that the bullion banks sort of missed out on that intermediation role that they were playing. So it gives us a little bit of joy to do that. But yeah, so we think it's a good win-win situation, but, we're upfront to clients about it. And when clients ring up and say, look, what's the difference and why should I go, one or the other, we do say it's a personal choice. But, the thing about unallocated, given that it's it's gold that's in our factory in process. Customers often ask this question, say, what happens if everyone turns up, to the mint and wants to take their gold? And our answer is, fine, but you've got to understand that we've got gold sort of in big bar form. Some of it's melted down into strips, some of it's sort of semi-fabricated, and you've got a bit of finished inventory as well. So everyone can turn up at the door at the same time, but we're not going to be able to just instantly give everyone their coins. We have to say, look, some of you guys are going to have to hold off while we sort of melt all the gold down, and I've only got so many mints to actually stamp coins out. So there'll be a delay while all that gold is transformed in the business, and the business effectively strips all the gold out and turns it into coins and delivers it. So some clients go, okay, look, I like the fact that, I don't have to pay an ongoing storage fee, but then they go, but I don't want that delay, I don't want that delay. It might be 10 days. It could be a little bit more. Obviously, if everyone turns up, it could be in the order of months. Hopefully, it probably wouldn't be months, but, there's a number of weeks that it could take to get all the gold and turn it into coins. So some clients are obviously concerned about, an accelerating sort of breakdown in society and those sorts of scenarios, and they don't want to wait. They don't want that delay. They want to know with allocated, they can turn up into the mint pretty much unannounced, although practically we do need some notice. But, in an emergency situation, they could all turn up and we'd go, fine, get it out of the vault and hand it to you immediately. You're done. You've paid your fabrication. There's no extra money you have to cough up. You can just get your gold and take it. And so that's the advantage of going with allocated versus unallocated. But you pay a storage fee for allocated and you don't pay it for unallocated. So it's just a personal trade-off that, each investor sort of makes.
I guess it's your degree of security that you're seeking that'll determine that. And all of your holdings that you've got are all audited regularly, correct?
Yeah, we do quarterly internal stock takes of all our metal, and the stock take is actually not just an inventory stock take of saying, okay, how many coins have we got, and weigh everything up. We also do a stock take from a balance sheet point of view, and just to explain, we treat gold, and you'll find this probably amusing, but we treat gold as a separate general ledger balance. We have assets and liabilities in ounces, and we run a separate set of books denominated in ounces to make sure that our assets and liabilities are always balanced. Then we run a separate books in currency. So internally, we actually sort of treat gold as a form of money, in the sense that we run an accounting set of books in a currency called gold, if you want to. So our quarterly stock takes are about balancing, not just counting the gold and checking it to our inventory system, but also then completely balancing assets and liabilities in ounces across the company on a quarterly basis. And then, of course, we have the normal internal auditors and external audit processes that go on as well. And the difference as well with us, where we've got another layer on top, is that the external auditors, our actual auditor is the Auditor General of the West Australian Government, which is actually independent of government. It reports directly to Parliament. And the Auditor General appoints the external auditor to audit us. And normally in a corporate company, the Board of Directors chooses the external auditor, so there's potential for them to choose an external auditor that may be favourable. In our case, it's the Auditor General that picks our external auditor and tells us, look, these are the guys that are going to be doing the audit. So it's not just the external auditor who's a Big Four sort of accounting firm. It's then the Auditor General reviews that work on top of that. So there's quite a bit of control, and the reason for that control is because the government owns us, and because they're very concerned to be on top of what we are doing and to make sure that we're running the business properly, because they're guaranteeing our liabilities and our actions. So they keep quite a tight leash on what we're doing.
Yeah, and I just found out recently that Australia's one of the few countries in the world that pretty much is debt-free. Is that correct?
Yes, it is. It's very low debt, and it's an interesting to explain why that's the case. And I can imagine people might go, "How is that possible?" And what Australian politicians, surprisingly different to other politicians. And, unfortunately, I don't think they are. But what happened politically in Australia, which is very interesting, is that a number of decades ago, we had a period where our Labor Party, which is the equivalent of the US Democrat, got into power in the 70s after a very long period in the wilderness. And it was quite controversial, and in the 70s it was a bit tough, and they got kicked out, and they were and effectively the Republican equivalent got in for another decade. And then when they got in the 80s, the early 80s, the Democrat-type party was very wanted to differentiate itself from the previous one to say that they were responsible economic people. And it was that government that actually floated the Australian dollar, opened up the Australian banking system to international banks, and did a number of other reforms. And they then started to really promote themselves in terms of the competing on the political stage, is to say, look, we're very responsible economically. And so things about deficits and the debt level become onto the political agenda as something important. And what's happened since then is that each political party now tries to outdo each other in terms of how fiscally responsible they are. And that has not just been a recent thing, it's been something for a number of decades. And it's considered political death in the Australian political system, you know, to be criticised as running up deficits and having wasted money and so forth. So we've now got this dynamic in the Australian political system where you do not want to be seen as running up a large debt, and that the public perceives that as you being irresponsible. So yes, it's worked in our favour and has given us a bit of robustness. However, I would point out that the private debt of the average Australian person is also quite high. So the government may have been prudent, but the Australian public has stepped up and made up for it in some way as well.
Well, maybe it's something in the water, I don't know, that would turn your politicians averse to debt and the public in favor of it. But I guess people are people and they want what they want. And if it means going into hock, as we call it in the States, to get it, it doesn't matter if you're Australian or you're British or you're Chinese or you name it. People will go into debt to get what they want earlier than if they had to work and save to get it. And as long as there are banks and financial institutions that are willing to bet the farm, as it were, on their ability to repay, we're going to have this debt situation. But
certainly, and Australia has the same. And look, I don't think it's different in any country. You know, most people want to have some sort of form of home ownership is a goal that a lot of people aspire to, and Australia's no different to that. And so there has been a case of Australians taking on a lot of debt to buy housing, and the same has happened in many other countries. So that's a lot of the private debt is really housing debt.
Yeah. So the next and final area I want to discuss with you is actual supply versus demand for gold and silver out there, because it's really hard as an individual investor or person who follows precious metals to really know what the market is. How would you rate the demand for metals at this particular moment?
Look, right now, it's interesting that we're still doing a lot of business into Asia, which probably really means China. But the retail demand has really come quite significantly. It's very noticeable for us at the moment. So in our depository business as well as our coin business, we've seen volumes drop off quite a bit. So the private individual demand has dropped off. India is obviously also very weak because the rupee is quite high over there. So those factors, I think, have taken a bit of base demand out of the market, and that's why we're seeing a lot of volatility in the gold price, because I think without India in there and without the retail investors in as strong as they have been, the speculative hedge fund type money has more influence and has caused the price to move around a bit. But I would say that this is a trend that we've seen many times where we see spurts in demand, where the demand's strong for a period of time, then it levels out and it cools off, and it goes into a sort of a flat period, and then a demand surges back in again. So we're just going through what we've seen before in this business is just dropping off of the demand. It's a little bit more drop off than normal, but we see that the demand will return at some point in the future.
Yeah, when the price goes up, amazingly, the demand materializes, right? It's irrational, because I always like to buy things when they're cheap, although I don't always know when they're cheap until after they get expensive. But investors are afraid, and they won't buy things until their opinion is validated, and then they get fearful that they're going to miss out on a rally and profits, and then they jump in right at the top. And you see that always on and on and on. And I guess what we're seeing now is no different than what we've seen dozens of times in the past, right?
Yeah, certainly. Look, I don't think it's helped by some of the more sort of spruikering and spinning that goes on in the precious metals area, where, you know, the price is high and then your commentators get onto that, and that obviously does drive people in. But I think as well, I'll just take one point with your comment. I mean, we certainly do see that when the price spikes, you know, investor interest comes up. But I have a theory that that's maybe what that's doing is that that spike of interest is new money that's coming in. Because what we observe in the depository business is people come in, they buy and they hold. They're not trading in and out. There's not a lot of volatility that goes through. They buy and they pretty much hold. So each of these sorts of surges that we see is new people coming in. Now, you might say, well, why do the new people come in at the high price? And I think what it is that they're driven by events. And obviously an event drives the price, and then that price reaches a headline, which reaches a new target level or a new high. That drives a news article in the mainstream media, and it then brings on the profile of gold onto the radar of someone who might have been thinking about it, but hadn't been called to action yet. And they see the new high of the gold price. There's some event that drove that economic event. They're a bit more fearful, and that calls them to action, and then they go in and buy. So that, I think, is also one of the factors. It's probably less of a negative interpretation. I don't deny that there are existing gold buyers who get disheartened and sell, and then they come back in and buy on highs. That certainly happens. But I think it's these new price moves draw new money in. And I sort of have a theory that everyone's at a different level of fear or different level of at which they're triggered into action. You know, some people are very optimistic and they believe in the system and they think everything's going to be fine. Others are a lot more sceptical, and I suppose on that scale of sceptical to optimist, everyone's got a different level. And as an event occurs, some people are triggered to go, you know what, I thought everything was okay, but this is the last straw that broke my back, and I now think I don't trust the system. I think something's not right. I don't know what's going on with the rest of my investments. The gold price has moved up. Yeah, I think I'll go and put some money into gold. Now, that thought process, everyone has a different level at which that triggers, you know. So, you know, the average guy in the street that you see walking around, they're going to be late into it. They're going to need a lot of events, a lot of MF Globals, a lot of bank executives getting huge payouts while they're being bailed out. You know, lots of really things before they start to question and say, wait a minute, what's going on here? I think I'd better protect myself. Everyone's got a different level of that. So I think gold price highs are really triggering people to question what's going on, and then that drives them to action into the gold price. So I think that's the pattern that I see occurring.
And that's a great point. And I wasn't going to ask you this question, but this ties in so perfectly because, as you're saying, gold is a measure of confidence, the price, confidence in currencies. And there's a lot of theories about manipulation, about large, what shall we call them, non-profit purchasers and sellers out there trying to influence the price of gold. And without kind of boxing you into a corner, suffice it to ask, how realistic is the current price reflective of the supply and demand and the true market for metals?
Look, it's really hard to say because, there's so much gold that's held privately and off the system. And because gold is traded not so much on exchanges, but as deals between individual companies, but also, private individuals, it's very hard to get a handle on the volume. So it's very hard to say, well, what is the real buying and selling volume that goes on in the market? And therefore, from that, you could work out what maybe the fair supply-demand balance that's going on. I mean, I make the point, mine supply is 2,800 tonnes. There's 171,000 tonnes of gold above ground. So what's happening to that above ground gold, how much of that is trading, and therefore you can get a sense of the supply-demand balance. I suppose the only thing I can say on manipulation is that governments are explicitly managing their currencies. They have foreign currency reserves. They buy the currencies of other governments, and they some to lesser or greater degrees manage their own currency by selling and using those foreign currencies. And gold is on that balance sheet as a reserve of the central banks. So if they're in the business of managing exchange rates and in the business of managing interest rates, it's not an extension to think that they don't also consider managing the gold price or utilising their gold reserves as part of their activities. Now, not each central banks, a lot of central banks wouldn't bother. They just sit on their gold reserves and they don't do anything with it. So it depends on which one you are. But I don't see it as a radical concept that central banks, their job is to manage, whether you believe it's the right thing or not to do, but they perceive their job is to manage the reserves of the country and to look after the country. So, yes, you could consider that a manipulation. I have an issue, though. I think there's a difference between manipulation and suppression. Manipulation means short-term, intermediate sort of an effect on the gold price, but not one that can really overcome the long-term underlying trend. Suppression implies that there's this continual and ongoing pushing of the price down, and I have less sympathy with that view because I just think that that's difficult to achieve on an ongoing basis. The amount of money that continues to flow into gold, to suppress it over 10 years or more would require increasing amounts of physical gold that simply just do not exist. So I'm more sympathetic towards a manipulation or a temporary sort of price management process, be it by central banks or by bullion banks or trading desks or people that are all playing this trading game and trying to sort of out-bluff each other. Less so with a continual and ongoing suppression that somehow the gold price is well below where it is. I think there's a significant amount of investor flow that we see coming into precious metals, and I doubt that anyone can really stem the tide of that on an ongoing basis.
We appreciate your input into that because it's an ongoing debate here in the States and all over the world. Role central banks are really playing in setting prices and keeping the markets at certain levels, and it's a big debate. And I think you shed a little bit of light onto it. Bron, we want to find out more about the Perth Mint programs available. Where should you go to get the info?
Just go to perthmint.com.au. There's a little tab at the top called depository, and you can read about all the programs there. Or, of course, you can go to any of our approved dealers, like Asset Strategy International or Euro Pacific, Goldcorp. Any of those will be able to help you out as well.
Excellent. Well, Bron, it's really been a pleasure talking to you. I've been curious about the Perth Mint for years now. Rather than just look on a website, it's nice to talk to somebody who's there, who knows what the score is. So we appreciate your coming on and definitely be keeping in touch with you over the months to see where the price is heading and supply-demand dynamics.
Great. Thank you.
All right. You take care.